Welcome back to Investing Talk podcast. Today we're embarking on a deep dive into BitOrigin, a company that has certainly seen its share of dramatic ups and downs. We'll be pulling apart all the layers from its core business model and intriguing technology claims to its recent financial health and market movements. Our mission today is to cut through the noise, understand the critical details, and give you a clear, concise picture of what's truly going on with this company. We'll explore its recent Nasdaq compliance, dissect its financial situation, and see how it stacks up against its competitors in a fiercely challenging sector. Before we jump in, if you find value in these insights, please consider subscribing, liking, and leaving a comment. Your engagement truly helps us bring more of these deep dives to you. And if you're feeling extra supportive, you can even buy us a coffee. Okay, let's unpack this. BitOrigin is a name that pops up when you look at the cryptocurrency mining sector. And its stock price chart over the past year looks less like a gentle hill and more like a cliffhanger movie. What exactly is BitOrigin all about, and what's behind this dramatic rise?
Well, BitOrigin primarily operates in the cryptocurrency mining space. Their big focus is on Bitcoin. So they're involved in, validating transactions, adding blocks to the blockchain, the whole process that takes a lot of computing power. They talk a lot about leveraging what they call state-of-the-art mining facilities. And they also emphasize integrating advanced tech, specifically AI, artificial intelligence, to try and optimize their efficiency and sustainability. What's interesting is while their main operations are here in the United States, the company itself is actually incorporated in Singapore.
Okay, so a crypto miner trying to use AI. That sounds like it could be a winning formula on paper, right? Especially given all the talk about energy use in the sector. But you mentioned a roller coaster ride, and looking at the charts, yeah, that's putting it mildly. Is that AI angle actually translating into real performance, or is their path more about the wider market forces?
It's definitely looking more indicative of those broader market forces, but also significantly exacerbated by company-specific challenges. The past year has been incredibly turbulent for them. I mean, we've seen their stock just plummet over 90%, down from a 52-week high of around $5.73, bottoming out near $0.16. Even just over the last 6 months, it slid from about 60 cents down to that 16-cent mark. So that reflects not just, the persistent weakness across the whole crypto mining sector, but also some really serious concerns about BitOrigin's own prospects. Even in the last month or so, before the most recent news, it was mostly trading sideways. Very low volatility between 16 and 17 cents. That usually signals a lack of major positive news or investor confidence. A drop like that over 90%, it's rarely just sector headwinds. It often points to deeper issues within the company itself.
Yeah, that kind of nosedive really makes you wonder what's happening under the hood, doesn't it? Let's peel back those layers then. What does their financial health actually reveal about these challenges? What are the latest statements telling us?
Right, when we dig into the financials, the picture becomes, well, quite stark. And it certainly helps explain that volatility we were talking about. Their revenue for 2024 came in at just $2.89 million.
Wow, just under $3 million.
Yeah, and that's a sharp 53% drop from the $6.26 million they reported the year before.
Ouch.
Now, their net loss did narrow slightly in 2024, coming in at minus $13.28 million compared to minus $17.53 million the prior year. But look, these are still really substantial losses for a company this size, especially one where the top-line revenue is shrinking so fast.
Okay, so revenue's falling off a cliff, and they're still losing millions, even if it's slightly less than before. What does that mean when we look at, their profitability margins?
Well, their trailing 12-month profit margin is around minus 32%, which is already concerning. But the operating margin, that paints an even more alarming picture. It's sitting at minus 206%.
Minus 206%? How does that even work?
It basically means the company is losing over $2 for every single dollar of revenue it generates, before you even factor in things like interest payments or taxes.
Wow.
Yeah, this isn't just, unprofitable. It suggests a fundamental breakdown in their core business model. Their operational costs are just massively outstripping their income from mining.
That is a lot of red ink. It sounds like a really serious structural problem. What about their debt? How's the balance sheet holding up with these kinds of losses?
The debt situation is equally concerning, maybe even more so. BitOrigin has a debt-to-equity ratio of approximately minus 300%.
Minus 300. How do you get negative?
That's because they have negative shareholder equity. It's sitting at about minus $1.9 million against total debt of $5.7 million. Negative shareholder equity basically means their total liabilities are actually greater than their total assets.
So they owe more than they own.
Precisely. In essence, the company owes more than everything it owns combined. It's a deeply concerning sign of potential insolvency. It suggests they're operating on borrowed time and money. Makes it incredibly difficult to get more financing or even just to weather more market downturns.
And with all that going on, where is their market capitalization sitting right now? That usually tells a story about how the market views their chances long term.
It's extremely low, hovering around just $9 to $10 million.
Tiny.
Yeah, firmly in microcap territory. And that raises serious concerns about maybe getting delisted from Nasdaq eventually, or just severe liquidity problems for anyone holding the stock. Their beta 2 is 1.46. That implies their stock is significantly more volatile and riskier than the overall market average.
Okay, we've seen a pretty bleak financial picture here. Is there anything at all that stands out as maybe a potential positive, a hidden asset, a strategic move, something that gives them a glimmer of hope beyond just talking about AI?
That's always the question, isn't it? Looking for that silver lining. The company itself, they certainly lean heavily on emphasizing their focus on technological innovation, especially that AI integration piece they say is for operational efficiency. If they could successfully implement that, and if it genuinely leads to substantial cost cuts or much higher mining yields, well, then it could offer some long-term cost advantages. But right now, honestly, this potential future benefit is completely overshadowed by the reality of the severe revenue drop, those persistent huge net losses, and that significant debt burden. Feels more like a theoretical strength, something they hope to achieve, rather than something delivering results today.
Right. Speaking of challenges and maybe potential lifelines, BitOrigin did recently make headlines for something that, on the surface, seemed like a big win. They regained Nasdaq compliance. Can you walk us through what happened there and why it was significant?
Absolutely. So back on January 3rd, 2025, BitOrigin got a non-compliance notice from Nasdaq. This was specifically about their minimum stockholders' equity requirement. Basically, they didn't have enough equity value to meet the listing rules. That's a critical threshold.
Okay.
But then, in a pretty significant development, on July 3rd, 2025, they announced they'd managed to get back into compliance. They met the required $2.5 million threshold.
How did they manage that?
It looks like it was achieved through a combination of things, some capital-raising activities, plus, importantly, they did a reverse stock split earlier in the year to get their share price back above the minimum $1 bid requirement.
Okay, so they jumped through the hoops. And what was the market's reaction to this news? Did investors see it as a sign of a turnaround?
Well, following that compliance announcement, their stock price did see a noticeable jump. It rose about 16.76% to just under 20 cents as of July 3rd. So that definitely reflected some positive investor reaction, right? It meant they avoided the immediate kind of existential threat of being delisted.
Which is huge for a small company.
It is. Delisting severely limits your ability to raise capital, diminishes your profile. It's bad news. Trading volume was pretty robust that day, showing people were paying attention. But it wasn't like unusually high for this kind of news-driven move. It really suggests this was mostly a relief rally. People breathing easier because of the regulatory clarity rather than any sudden belief based on, fundamental improvement in the business itself.
That makes sense. So this Nasdaq compliance news, while it sounds like a definite positive, reading between the lines, it doesn't really solve their core problems, does it? Is it more like just buying some time?
It's definitely more of a temporary reprieve, a necessary step for sure, but not sufficient on its own. Regaining compliance is crucial, yes, for keeping that listing status and their access, however limited, to capital markets. But BitOrigin is still under ongoing Nasdaq monitoring. So if they fail to maintain compliance in their future filings, maybe the equity dips again, or the share price falls below $1 for too long, or they miss other requirements, they could absolutely face renewed delisting proceedings. Now, the company would have appeal rights, but the risk is still there. So while they've dodged an immediate crisis, it doesn't fix the deeply rooted issues. The operational inefficiencies, the shrinking revenues, the ongoing unprofitability, those core business challenges are still very much front and center.
You've mentioned these sector-wide pressures a few times. So how does BitOrigin actually stack up against its competitors? When you look at the broader crypto mining space, are they a significant player, a tiny niche operator, or just struggling to keep up?
Their scale is really minuscule compared to the big players, the leading U.S.-listed miners like, say, Riot Platforms or Marathon Digital Holdings.
Right, those are much bigger names.
Exactly. Those larger competitors, they boast market caps well over $500 million. Some are over $1 billion. Their revenues are often hitting $200 million, maybe $300 million or more for Marathon in good times. And many of those bigger guys, they've either returned to profitability during favorable market cycles or at least have significantly smaller losses relative to their size. Plus, some have built up substantial Bitcoin holdings on their balance sheets.
Okay, so the bigger players just have vastly more resources and operational scale. What does that fundamental difference mean for BitOrigin's actual competitive position and maybe its long-term survival chances?
Well, it means those larger peers have much stronger balance sheets. For one, they have far greater access to capital markets, whether that's for expansion or just to ride out the inevitable crypto downturns. And critically, they have higher hash rates, more computing power, and more power capacity overall. That translates directly into mining more Bitcoin. They also often benefit from economies of scale, which can lead to more competitive cost structures, maybe better deals on energy or hardware. BitOrigin, on the other hand, lacks any meaningful market share. They don't really have a discernible competitive moat, something unique that protects them against these established giants. And remember, the broader industry itself is already facing significant headwinds. You've got the inherent volatility of Bitcoin's price directly messing with mining profitability.
Always a factor.
Always. Then there are rising global energy costs, which is a huge input for miners. Plus, relentless increases in network difficulty. It just keeps getting harder and harder to mine a Bitcoin. This competitive pressure is then further cranked up by the rapid adoption of things like, AI integration and more efficient hardware solutions by those larger players. It's like a technological arms race.
And the small guys struggle to keep up.
Exactly. Small miners like BitOrigin struggle just to keep pace, let alone lead. It's an incredibly challenging environment, and being small just makes it that much harder.
So, putting it all together then, if we pull all these threads, the shrinking revenues, the really difficult financials, that temporary Nasdaq reprieve, and this intense competitive landscape, what's the overall outlook? What are the key risks someone should be thinking about here?
Given everything we've discussed, the outlook for BitOrigin remains profoundly challenging. It's hard to put it any other way. The main potential upside catalyst for them, really, would be a sustained and significant rally in Bitcoin prices. That tide would lift all mining boats, improving margins across the board.
A big if.
A very big if. But the risks are just substantial. Further declines or even just prolonged sideways movement in Bitcoin's price would absolutely exacerbate their losses. It could potentially push them past a point of no return financially. Then you have regulatory risks always hanging over crypto miners globally, whether it's environmental concerns, taxation changes, and of course that ongoing Nasdaq compliance monitoring. The threat of delisting hasn't vanished entirely, it's just, let's say, on pause. Crucially, there are no announced upcoming product launches, major operational changes, or corporate actions that look like they could serve as near-term catalysts to fundamentally shift their trajectory.
And is that pretty grim outlook reflected in what people are generally saying? What's the broader market sentiment towards BitOrigin?
It is, yes. Recent sentiment across news outlets, investor forums, social media, it remains overwhelmingly bearish. Analyst coverage is minimal, bordering on non-existent, which is usually a red flag in itself regarding institutional interest or confidence. Posts you see on platforms like X, they highlight deep skepticism about BitOrigin's ability to survive these ongoing industry headwinds, especially given its shrinking revenues and those persistent losses. Even the recent chatter after the Nasdaq news, as we discussed, was mostly relief about avoiding delisting, not suddenly bullish speculation about operational growth or a path to profitability. It seems clear that for most observers, the fundamental story hasn't really changed.
So if we connect all this back to the bigger picture, what's the bottom line here for our listeners? Someone trying to make sense of this company, maybe considering an investment.
Well, based strictly on the available data, the financials, the market context, the stock really has to be considered a sell for most investors at this point in time. BitOrigin faces severe structural challenges. Those shrinking revenues, the persistent heavy losses, a critical lack of scale compared to its peers, minimal analyst or institutional backing, and just generally poor competitive positioning in what's already a capital-intensive and highly volatile industry. Now, sure, there's always that speculative upside, purely tied to a massive sustained crypto price rebound, essentially. You're betting on Bitcoin itself carrying everything higher.
A pure gamble on the market.
Pretty much. But the company's own fundamentals currently don't justify even holding the stock, in my view, unless perhaps you're an extremely risk-tolerant trader looking for very short-term momentum plays. For listeners who are seeking exposure to crypto mining stocks but want, less existential risk, the larger, financially stronger competitors, names like Riot Platforms or Marathon Digital, they offer far more robust financial profiles and clearer competitive advantages.
Yeah, this deep dive into bit origin really does underscore the importance of looking beyond just one headline, doesn't it? While regaining Nasdaq compliance was definitely a positive and a necessary step for them, it just doesn't erase the underlying financial and competitive realities that are really pushing against the company. So, for you, our listener, maybe the question Bit Origin's story raises is about navigating this highly volatile and speculative world of crypto mining stocks in general. How do you weigh that occasional glimmer of good news against what might be a mountain of persistent financial challenges when you're making investment decisions? It's a crucial question, I think, and worth pondering as you navigate these complex and often unpredictable markets. Thank you for joining us on this deep dive. Until next time, stay well informed.